Good morning, members. We have a quorum. We've reached the appointed hour. This is the beginning of New Year. May I wish you every success in New Year. First of all, agenda item number 1. Confirmation minutes and matters arising. The minutes of the meeting on the 3rd of November 2014 has been sent to members. Is there any, if you have any proposed amendment? If there is no amendment, then minutes confirmed. Item 2, information papers issued since the last meeting. There are altogether 5, and the details are on the agenda. If there is no specific comment, then we will move on. And then date of next meeting and items for discussion at the next meeting. On the 1st of December, because of the confusion of public order near the chamber, we had to cancel the meeting, and 4 items, 2 out of 4 items were deferred to today's meeting. As for the briefing by FS and consultation, the item will be discussed later. I've talked to the FS to see if a meeting can be made, arranged, and then Secretary will speak on the discussion. Thank you, Chairman. As said by the Chairman, we cancelled our meeting on the 1st of December, and then we liaised with the office of the FS, hoping that a meeting can be arranged for the FS to speak on the 2 items, i.e., the budget and relative policy initiatives. The FS was rather busy, and he had overseas trips, and we are unable to arrange the meeting. We issued a letter under the instruction of the chairman to the FS to arrange for the meeting, and there was a reply on the 24th. He pointed out on the 1st of December, the FS was aware of the cancellation meeting. He called a press briefing and updated the public on the latest economic situation. It's also mentioned that the 2015-16 budget was subject of consultation since October last year, and information together with the policy address. And he would have a chance to make a briefing based on the budget and also the policy address. The office is of the view that attending a panel meeting will not be very effective. And he hopes that members can understand this, and if need be, an arrangement can be made for the meeting. As far as we know, the FS, after the announcement of the budget, will attend the FC, and make a briefing and give a briefing to members. In the letter dated 24th December, the office of the FS provided the speaking notes of the press briefing and also the PowerPoints for the scheduled panel meeting. The information papers were sent to member CB 1399/1415 to members. I hope members can take note of that. Thank you. Do members have any comments on this arrangement? Basically, the FS will come again at the special FC meeting in March. By then, you can put questions to him. Right. If there is no further comment, let us move on to the regular meeting in February. The next regular meeting is on the 2nd of February. The SFST will brief members on the relevant policy initiatives in the Chief Executive's 2015 policy address. The administration also proposed to discuss the following 3 items. The report of the HKMA, or briefing on the work of HKMA, the budget of the SFC for the financial year of 2015-16. And the third item is second stage of public consultation on establishing an effective resolution regime for financial institutions in Hong Kong. Concerning these items, do members have any comments or views? If not, then please take note that we do have a long agenda. We propose to start at 8:45 until 1. Any comment? Please come, otherwise the meeting will be aborted. The FSTB also asked to start the briefing at 8:45 until 20 past 10. If members don't have any comments, I'll move on. Agenda item number 4, proposed implementation, first phase of the OTC derivatives regulatory regime in Hong Kong. Let's invite officials in.
由於呢個建議咧係涉
Now, the legislative proposals are involved, and therefore other members are invited to participate in the discussion. The administration has provided paper. You may refer to them. You may refer to it, rather. And there will also be a PowerPoint presentation.
I
welcome the representatives of the administration and also the SFC, and if you have settled in, then you can start. Chairman, members, good morning. The Bureau, together with the HKMA and the SFC, are here to brief you on the proposed implementation first phase of the OTC derivatives regulatory regime. I will make a short briefing on the background. Thank you. Because of the financial crisis in 2008, the structural problem of lack of transparency, it was exposed, and the G20 leaders agreed to regulate OTC market. In 2011 and 2012, the HKMA and the SFC consulted, made 2 rounds of consultation, and in 2013 we submitted the bill to the Council, and in 2014 March, the Council enacted the Securities and Futures Amendment Ordinance 2014 to provide a regulatory framework for OTC derivatives market in Hong Kong to meet the commitment of the Group of 20, or G20. The framework enables the mandatory reporting, clearing, and trading of OTC derivatives transactions, and introduces a record-keeping obligation to supplement the implementation of these obligations. As for the precise ambit and the details of these obligations, they will be provided for clearly in detail in the subsidiary legislation, which will be made by the FSC in consultation with the after consultation with the FS. We will implement the regulatory regime in phases. In the first phase, it will be the mandatory reporting and related record-keeping obligations, and that is what we want to report to you today. The HKMA and the SFC in July and August 2014 conducted consultation on the draft rules. I will now invite Mr. Ho of the HKMA to report to the panel. The proposed first phase of implementation of the OTC derivatives regulatory regime in Hong Kong. Yes, Mr. Ho, please. Thank you, Chairman and members. First, I will speak on the main features of the mandatory reporting. We propose two types of transactions. First, IRS, and they cover plain vanilla IRS. Say if there are two financial institutions, they agree to swap floating versus fixed interest rate, then it will be regulated. The second kind of product is plain vanilla basis swap, that is floating against floating. These are very common IRS contracts in market. With regard to the currency and also the floating rate indices, they will be specified by the HKMA. The second main category of transactions is the NDFs. In developing countries where the liquidity of such currencies is not very common, they will be specified by the HKMA as concerning the currencies that will be incorporated in the reporting regime. As for the reporting entities, they will be the authorized institutions, i.e. banks, the approved money brokers, licensed corporations regulated by the SFC. They have to report their OTC transactions. And the final group is the central counterparties that provide clearing services to persons in Hong Kong. You may have heard that we will introduce central clearing requirements. When there are central counterparties providing clearing services, we require the CCPs as a counterparty to report their transactions to us. As for the reporting obligations of different parties, we've highlighted this in page 9. As for AIs, AMBs, and LCs, they have two types of obligations. Now, if they play the role of a counterparty, then they have to report to us. And there is a second limb. If these banks conduct transactions on behalf of their affiliates, then they will also have to report to us. Let me explain this further. Many foreign banks who do business in Hong Kong do participate in OTC transactions. A very common practice is that these transactions are finally booked with an affiliate within the same group. This is for risk management. To enable our reporting system to have an adequate coverage, we require these financial institutions, when conducting transactions on behalf of their affiliates, will have to report to us. These are for the three types of entities. As for the reporting obligation of CCPs, there are two possibilities. The first one is that the CCP may be a RCH, registered clearinghouse. Say, for example, there is a CCP being a RCP. It should report all transactions that it play the role as a counterparty, and there is a second possibility.
As CCP for parties which have been granted ATS, they will also have to report to us. So these include offshore companies being counterparties when they provide such services, and in the process of clearing as a counterparty, and if it involves a Hong Kong registered company, then they would also have to report that transaction to us. So as you can see here, so as far as AIs, AMBs, and LCs, well, the responsibility would be somewhat different from that of a CCP. So that has to do with the nature of the market services that are being provided. With regard to the ambit of report, so we require them to report certain things to us, And the first thing that they will have to report to us would be as soon as the reporting rules come into effect, then for all new transactions, they will have to be reported to us. So that's point number one. And second, they would also have to backload historical transactions that are still outstanding. In other words, reportable transactions enter into before the reporting rules come into effect, but which are still outstanding at that time. So there is a backloading requirement. In other words, for such outstanding transactions, they would also have to report them to us. So they will have to report that to the transaction repository. So that would apply to transactions involving them as the counterparty. So in other words, for previous transactions, if they are doing that on behalf of their affiliates, then they would not be required to do this backloading reporting. And the third thing that will be required to be reported, that would be any subsequent events relating to transactions that have been reported. For example, if they have already entered into the initial contract, but then after there have been some changes in the market conditions, they might have agreed to change the terms of the transaction, for example, the notional amount or the premium. So those would be the likely changes that would take place after the signing of the contract, and we would call them subsequent events, and they would also have to report that to the TR. And when they report such transactions to us, what sort of information will have to be included? Well, in the reporting rules, those will be set out very clearly. I can give you some examples. For example, well, taking the IRS as an example, so they will have to tell us exactly which currency is involved, and also when there is an IRS, whether or not it's a floating rate or a fixed rate, and also the contractual period and so on. So they would also have to tell us them that, and also the name of the institution and also the code for that company. So they will have to set out all the information in the report. And what needs to be mentioned is about the daily valuation of their transaction. And we expect that after 2015, they will have to report on a daily basis on the valuation of such transaction. In other words, in the future, all financial institutions will have to review all outstanding transactions involving OTC derivatives, and they will have to carry out this daily valuation, and then they will have to report that to the HKTR. But then that would also involve the system change of the HKTR and also the internal systems change of those institutions. And under the proposed regime, there are also some exemptions. Taking the AIs, the AMBs, and also the LCs as an example, when they are doing the transaction on behalf of their affiliates, and if these affiliates have acted in good faith, and if they have already reported them, then the AIs, the AMBs, and also the LCs will have been taken to have complied with the reporting obligation in respect of such a transaction. So these are the exemptions that are in line with the current regime, and there are also this category of exempted persons. So these would apply to the AIs, AMBs, and LCs that are small players and not active in the OTC derivative markets. So we have drawn a line whereby the non-notional amount would not exceed 30 million US dollars, then they would be exempted. So that is to ensure that for companies that have only engaged in one transaction, they would not be required to report to us, and that would also ease them on their reporting burden. And also there is no substitute arrangements. In other words, if you have to meet the requirement, then you will have to report that to the HKTR before you can meet the requirement. And if you report that to some offshore TR, then that would not be accepted as a replacement. And also in terms of the implementation, we would also be offering some concession period and also grace periods. So after the reporting rules come into effect, we will offer this 6 months initial concession period for entities to have enough time to set up the necessary system connection for reporting to the HKTR, and there would also be a 3 months thereafter as grace period. Because as we say, they would also have to report on all new transactions, and also there would also be this backloading requirement, and therefore for backloading requirement we would give them a further 3 months for compliance. Therefore a total of 9 months will be offered for concessionary and also grace periods. And also there would also be new types of transactions which will have to be reported, but then correspondingly there would also be an initial concession period and as well as grace period to be offered on new products. Finally, on how the information collected is to be used, as we have set out, was for such information that has been collected, they will only be used for regulatory and market surveillance purposes, and the data may also be shared with other regulators and TRs to facilitate joint efforts in monitoring or regulating the OTC derivatives markets. Finally, we will also be disclosing certain information to the public on a regular basis, but then that would only be made in summary form. In other words, when such information is disclosed, it would not disclose the amounts and also the identity of the financial institutions that are involved. Finally, on the main proposals for mandatory report keeping, well, that has to do with the reporting requirement or obligation. Because when we implement this reporting obligation, at the same time, we will also be requiring these market players or participants to keep certain records in order to demonstrate compliance with the reporting obligations, and where applicable, as regulators who has the duty to find out if they comply with the requirement, we also have to be able to trace their records in order to ascertain if they have complied with the requirements. That's why they will have to keep such records for a certain period in order to ensure that they have complied fully with the requirement, and for us to conduct checks on them. And for institutions that have been granted exemptions, they would also be required to keep certain records to demonstrate that they are entitled to certain exemptions or reliefs. And the requirement is that they will have to keep the record for 5 years from the date the transaction matures or is terminated. So they will have to keep such records for 5 years after the transaction has been completed. So that has to tie in with the reporting obligation. And here I would also like to say that when coming up with the reporting rules, we have conducted a joint public consultation exercise, and we have received some recommendations and suggestions from consultancies and also professional bodies and also the final users and also stakeholders. And concerning the proposed reporting rules, the market's response is mainly on the timing for implementation and also the duration of the concession period. And some would like us to implement the requirements in phases, and also extending the types of exemptions and reliefs and so on. All in all, we have tried our best to incorporate the stakeholders' views in our draft rules. So for the other technical issues and also for market facilitation measures, we have already incorporated them in the rules, and they've been reflected in the draft rules. Finally, on our work plan, as we have said in November last year, we have already published the consultation summary and also the draft rules on the reporting rules. And in the first quarter of this year, the first batch of subsidiary legislation, including the reporting rules, will be tabled before this Council for negative vetting. Thank you. Okay, 2 members have asked to speak, Mr. Wong Kwok Heng and Mr. Sin Chung Kai. and then Mr. Ng Leung Shing and Mr. Christopher Cheung. All right, 3 minutes, including both questions and answers. First, Mr. Wong Kwok Hing. Thank you, Chairman. On stepping up regulation in order to ensure that the market will develop healthily and steadily, that's something that I am in support of. But then I have several questions to make. Given the fact that it's a mandatory requirement for any failure to comply, will there be sanctions? So the paper is silent on this. If there is no penalties, then what's the purpose of introducing this as a mandatory requirement? Second, on the record-keeping requirement, according to the information here, it will be 5 years after the completion of the transaction. That's because that would tie in with the other relevant legislation requiring the parties to keep the information for 6 years or 7 years. So can you explain why you do not tally with such a requirement, whereby the parties would be required to keep the records for 7 years? Now you only require them to keep that for 5 years. And finally, on the backloading requirement, you talk about the backloading requirement. Why can't you provide specifically as to the years before a certain date when they will have to keep the records? First, on the penalties on the failure to comply with the requirement. Well, we have not touched on that during this briefing, but then on earlier occasions when we briefed members on the draft rules, we have already talked about that. Well, for any party who fails to comply, then there will be a civil sanction. And the HKMA and the SFC have also been empowered to target the AIs and also institutions which have failed. They would also be sanctioned, or they would also be reprimanded, and they would also be prevented from engaging in such OTC derivatives transactions. For the second and third point, I'll defer to my colleague from the HKMA. With regard to the record-keeping requirement or obligation on the number of years where the record will have to be kept, why 5 years? In fact, we have taken reference from overseas major markets experience, because we have to take into account that this is a relatively global market, and for institutions from Hong Kong participating in such transactions, many of them would be international banks, and as they are also facing similar requirements imposed by other jurisdictions, and most of these jurisdictions would require them to keep the records for 5 years. That's why we try to align with those overseas jurisdictions by imposing a 5-year period. With regard to the backloading requirement, in fact, the rules are very specific already. In other words, for all the transactions which are still outstanding by the time when the reporting rules come into effect, then they will have to report all of those to us. So there is no need for us to look at the maturity of the original contract. So long as these transactions are still outstanding, they will have to report them to us. Mr. Sin Chung Kwai, just now the Permanent Secretary or the Principal Assistant Secretary said that that was announced in 2008 already by the G20, but then in the US, they were mainly looking at the toxic shares or securities. But then in Hong Kong, we're talking about the mini bonds. But then you talk about the G20, and then the reporting requirements have arisen from those discussions or negotiations. Well, maybe I don't know that too well, but then as far as I am aware, Hong Kong was not one of those that has been subjected to such risk before. Yes, that might have given rise to some problems, but then you're not regulating those which have been shown to have problems. But then you might say that, well, this would be a problem area, that's why you are imposing this requirement. But then apparently you're not really addressing the problem that we have experienced. For example, in the past we had a rotten apple, and now you're trying to regulate the orange. Well, I would ask Mr. Ho to answer the question. Thank you, Chairman, and thank you, Honourable Member, for your question. With regard to the financial tsunami,
there are various contributing factors, including the secondary mortgage in the United States. Now, the OTC derivative market is involved because during the financial tsunami, it was discovered that major financial institutions were involved in the OTC derivatives market to the extent that they were far beyond the understanding of the regulatory authorities. And as a result, the problem spread through OTC through the OTC derivatives market. The regulators found that they had little understanding and the regulation was not strong enough. This is a global market. Major financial centers, including Hong Kong, have to consistently implement such requirements so that we are able to understand the interconnection of these markets and also the risks involved. We should also adopt the same standards on clearing and transactions. To answer Mr. Sin's question, this is the result of spreading out a financial accident. Now, there are many derivatives, many kinds of OTC derivatives. They are high risk. Why you choose these two and nothing else? Thank you. We have looked at the products in our market. In our OTC derivatives market, IRS and NDF transactions are the major types of transactions. In the future, if other products are more important, then we will speed up the introduction of regulation. We plan to introduce the regulation of other products. Mr. Leung Sing. Thank you, Chairman. Concerning the regulation of derivatives, we want more protection. And if there is good protection, there will be safe and long-term development. We also hope that being a participant, we hope that not much manpower, additional manpower will be required. We hope that the collection of information and reporting will be done by more computerization or automation so that the cost of compliance will not be too high. And if the cost of compliance is high, the cost will be passed on to users. As for my questions concerning Para 10, some jurisdictions have adopted the your proposed regulatory obligations. Who are they, and for how long have they adopted these reporting obligations, and have they encountered any problems? My second question is in relation to 16B, concerning a grace period of 9 months altogether. Is it a consensus within the trade or a consensus with the trade? Is it appropriate? The third question is a simple one. Finally, is a matter of disclosure. But you also need to strike a balance between keeping confidential information. Now you say you will disclose data. To what extent do you disclose this data? Ms. Ang. Thank you, Ms. Ng. Ms. Ng has asked a general question on the cost of compliance. The SFC and the HKMA, in drawing up the reporting rules, have taken that into account and have and have found a balance. As for the specific answers, I ask Mr. Ho to address them. With regard to paragraphs 9 and 10, concerning the reporting obligations, we have made reference to the practice of some jurisdictions overseas. With regard to the reporting obligation imposed on counterparties, nearly all jurisdictions have imposed this. In the United States, in Europe, in major financial markets, there is such a requirement. As for reports of transactions on behalf of affiliates, Singapore and Australia have adopted the same requirement. Why we take a leave from them? Now, this is a global market. Many international banks booked their transactions with their overseas affiliates. We've made reference to the practice, or rather, we are a financial market or financial center outside Europe and North America. And the transactions may be booked with, say, the affiliates in Europe and in the United States, and therefore we need to have such an arrangement. And in fact, that is not unique to Hong Kong. As for the grace period, we have adopted the view of the market, and we believe that our proposal has got the support of the market. What about disclosure of information? Basing on the practice of overseas TRs, we only disclose overall numbers on the transactions. We do not report on individual transactions or individual types of transactions. There will not be any risk of guessing the positions of certain institutions, financial institutions. Next, Mr. Christopher Chung. Concerning enhancing the regulation of OTC derivatives market, I noticed that the administration has decided to exempt small players. How do you define small player? Is it by transaction amount or by capital? There are risks for both small players and big players. What's the use of exempting small players? A small player may fold up because of high-risk transactions, and that may have a ripple effect affecting even bigger players. Why you exempt small players? Mr. Ho. I thank Mr. Chung for the question. As for the line, drawing the line for exempting the players, we've done some observations. There are small LCs who are not active in the market. When we draw a line, we use the notional amount of $30 million as an indicator. If any financial institution has an outstanding position of no more than $30 million, then it doesn't have to report. We need to regulate the market. We need to also balance that against the smooth operation of the market. We think the line of $30 million will exempt small players or players who are not active in the market, and that will reduce the cost of compliance. Whether there is a loophole in the regulatory regime so that we cannot effectively monitor the risks involved, in answering Mr. Sin's question, I have touched on that. The lessons from 2008 financial tsunami was that derivatives were the links linking financial institutions. Large financial institutions entered into derivatives transactions. When one failed, the other would fail as well, like said dominoes. Now, in order to cause such an impact, the position has to be very big, and the connections have to be very wide and complicated. At the start, as I said, we need to find a balance between regulation and smooth operation of the market. And we believe that exempting small players is a suitable balance. Mr. James Hill. Let me ask a simple question first. Para 6. Specified currency specified by the HKMA. Do you intend to include renminbi and ruble? Mr. Ho. Thank you for the question. As for currency specified by the HKMA, depends on what type of products. As for IRS, there are ISO currencies or major currencies such as US dollar, Hong Kong dollar, so on and so forth. Renminbi will be included. As for NDF contracts, the currencies covered include renminbi and the Russian ruble. Now suppose the Chinese government and the Russian government enter into a NDF contract, and they don't make use of further clearing facilities. So will this not be reported, even if it is a big amount? Ms. Lee will help to answer the question. Ms. Lee. Thank you, Chairman. To answer Mr. To's question, in our reporting obligations, if a government is a counterparty, there is no such obligation. If the counterparty is a financial institution, then that financial institution has the duty to report. So there is only an indirect reporting obligation, but not a direct reporting obligation. Now that's a type of sovereignty issue. Earlier on, I don't know whether it's G something. Sovereign states would not be regulated. But there are many sovereign states in this world. Some may be very small, and they can cause a big problem. Say, for example, I have a small country which is very friendly to me, and then I enter into a contract with that country, and it collapses, and then the world will be upset. So will you just exempt it, even if it is risky? Yes, I hope. As for reporting obligation, we need to consider the scope of the principal ordinance, and the scope of the principal ordinance applies to persons in Hong Kong. They are the AIs, they are the licensed corporations, AMBs, and CCPs. Our law is not extended to overseas governments or overseas financial institutions. If our financial institutions enter into deals with overseas parties, then they are required to report. As long as the financial institution is an AI or a LC, when they conduct the related transactions, they have to report to us.
So there is no question of the regulator not being made aware of that. But then what if there are two governments which have engaged in such transactions, and therefore they will enjoy this exemption? No, according to our observation, if there is any sovereign fund that would like to engage in such transactions, they will have to do so through financial institutions, because the financial institutions would be the main players in such a market. But then just to engage in an academic discussion, no, I'm talking about the legal implications. All right, if there are two offshore parties engaging in such transactions, then they would not be involved in the local OTC derivatives market, and therefore they are not subject to regulation. Well, what about the Taiwanese government? Would that be would that come under the ambit that you just say? No, the Taiwanese government would not be deemed to be a Hong Kong entity, so they would be enjoying exemption. No. First of all, they would only where parties are subject to the regulatory requirement, then there is this question of exemption. But then, as you're not going to cover sovereign funds or states, therefore you're not regulating them at all. You will have to go back and think about it, because in the financial arena, anything can happen. That's why I'm asking you tricky questions. That's why I did not ask that at the Bills Committee stage. Sorry about that. Sorry, you're not coming through, so please say again. Sorry, I'll have to switch on the right button. I'd like to supplement. Just now, the honourable member referred to the Taiwanese government. In fact, the Taiwanese government is an outside entity. That's why Hong Kong's regulatory regime will not cover the Taiwanese government. But then, as Mr. Ho just said, if the Taiwanese government engages in a local financial institution in such a transaction, then the local institution will have to report. But then what if the representative from the two governments sign a contract in a hotel, so they do not have to engage in such a transaction through a local financial institution? But then that would not be regarded as an OTC derivative transaction in Hong Kong. But then what if two governments' representatives sign a contract in a Hong Kong hotel, which is an NDF contract, and then if the currency is one of the currencies under your regulation, then do they have the duty to report? Apparently, from what I've heard, there is no obligation on their parts to report, because they are not subject to the local legislation. That's why we cannot make them report. So, even if a Taiwanese company signs a contract with the Japanese company, whatever transactions that they are involved in will not be required to report to us. Well, the administration proposes that in the first quarter of 2015, the draft legislation will be tabled before this council. Any questions on this timeline? Yes, Mr. James Toh. Well, with regard to the question that I just asked, can they think about it in greater detail and then give us a supplementary paper? All right, please think about it. I have to know where the line will be drawn. For example, on the risk, and also what are the areas that should be subject to regulation. So please think about it. Okay. Next item. Proposed adjustments to the customs and excise fees and charges.
I'd
like to welcome government representatives attending the meeting on this item. So please walk us through the paper. Members, we are here attending the panel meeting. That's because we'd like to adjust some 20 fees and charges under the Customs and Excise Department with regard to commodities and also first registration tax. So we are here to brief members on the details. Government's policy is that in line with the user pays principle, fees, charged for public services should in general be set at levels sufficient to recover the full cost of providing services. Since the commencement of the comprehensive fee review as announced in the 2013-14 budget, policy bureaus and departments have been reviewing various fees and charges with a view to achieving full cost recovery. The CNED is no exception. With regard to the 20 fee items that have been under review, we would like to adjust them, and they cover mainly 4 categories. Number 1, license fees for traders of dutiable commodities. Second, charges for various certificates and fees for storage of dutiable commodities. 3, bonded warehouse supervision charges. And 4, registration fees for motor vehicle importer and or distributor. So a total of 20 items are involved, and we are now proposing to adjust them. With regard to the rate of increase, they range from 10 to 20%, and the purpose is to recover the full cost. And for the 20 items, in fact, 4 years ago they have been revised, and since then there has been no revision whatsoever. We expect that the fee adjustment proposal will bring in about $560,000 for the administration in terms of revenue. So the floor is now open. 3 questions. First, Wong Kwok Heng. Second, Sin Chung Kai. Wong Kwok Heng, Chairman. Well, on the issue of cost recovery, I generally support the proposal, but then I do question item 11 in the annex. For every certificate of the government chemist that any spirits or methyl alcohol are denatured. So the last revision was in August 1974. So it's been 40 years since the last revision. So why has the CNE department taken such a long time to review the cost, and now you're asking to adjust it in order to recover the full cost? So that is totally unreasonable. How come during the last 4 decades or so you have never made any suggestion to adjust it? So has it been a negligence on the part of the administration, or is it a maladministration? You're only proposing a fee adjustment now after 40 years. So can you explain why during the last 40 years or so you have never suggested to adjust it? Thank you for your question. In fact, on this particular item, in the past, when we review the fee adjustment, we have reviewed that, so there is no question of us being negligent. In fact, according to my recollection, on the previous occasions, basically they've been able to recover the full cost for this item. That's why we did not propose to increase the fee, and only in recent years, well, we may not have been able to fully recover the cost, still somewhat close to full cost recovery, and also in order not to inflict any impact on the trade, we have not proposed to adjust it on previous occasions. But then on this occasion, when we reviewed it again, we noticed that in terms of the cost recovery level is on the low side. That's why together with other fees adjustments, we are proposing a fee adjustment. So there is no question of us being negligent in the past. We have applied the same rule and principle, and the rule and principle are that we have to apply the user pay principle, and therefore we will recover the full cost, and we are now proposing this adjustment. Chairman, I don't think the administration's explanation is reasonable, because you talk about the rate of cost recovery is only 43%. Yes, even though the absolute figure is very low, it's just $1 or 1% of the duty. But then in terms of the percentage of cost recovery, you're talking about 43%. In fact, if you look at a similar discrepancy, you should have looked at that more closely in the past instead of just asking for this adjustment now. Yes, Mr. Poon, when we look at the fees and charges, we try to look at all the fees and charges under the CNE department before we make any recommendation. As I said earlier, well, we have to apply the principle of user pay and cost recovery on every occasion. I'd like to urge you to go back to look at all other fees and charges which have not changed for decades, and if there is any adjustment, you would see a more hefty increase. So please do not allow this to happen again in the future. So can you promise that you go back and take a look? Well, in the past, you have looked at that. It's not true to say that you have not looked at it during the past few decades. It's just that in the past, you did not find it necessary to adjust the fees. Indeed, that's true. But then we felt that we were able to recover almost the full cost. That's why we did not propose to adjust it, or it was under review. That's why we did not propose to increase it. But then on this occasion, we find that there is a discrepancy. That's why we try to propose to adjust it in line with others. Yes, Mr. Sin. Yes, after the adjustment, you've been able to recover a higher level of cost, but then still you're using taxpayers' money to subsidize other people in doing their business. So are there any other ways where you'll be able to recover the full cost for all these services? The last fee adjustment, as Mr. Wong just highlighted one item, well, that was in April 2010, so it was about 5 years ago when you last adjusted the fees and charges. Do you have any target as to when you're going to adjust it again? So I suppose you don't want to impose a hefty increase every time. So would you be steadily increasing the level of recovery? So is it an arbitrary exercise? So do you have any target date as to when you'll be able to achieve full cost recovery? Well, with regard to departmental fees and charges, in fact, every year we would review the fees and charges at the beginning of the financial year. But then, as Mr. Wong just said, when we propose any adjustment, we also have to look at the impact on the trade. For example, according to our general guidelines, where there are items where the cost recovery is less than 40%, then the adjustment would be by some 20%. And if it's between 40 and 70% in terms of cost recovery, then the adjustment would be by 15%. So we try our best to ensure that there would not be too hefty an increase to the fees and charges, resulting in a significant change in the fees and charges, so much so that the trade might find it unacceptable. But then, as far as possible, we try to recover our full cost, and indeed, in some cases, we have been able to achieve that target, and that's why we are not proposing any adjustment on this occasion. That's why it's subject to an annual review. So do you have any target as to when you'll be able to achieve full cost recovery for all the 20 items? We try our best to do it, Chairman. Because for every fee item, well, for the users of such services, they would be different, and also for the cost component, they would be different. And as time moves, as time goes by, they might subject to different changes. That's why we will have to look at it separately every year to achieve this full cost recovery. Do you have any target as to once every 2 or 3 years you adjust it instead of doing it once every 5 years? Because if you only revise it on a very infrequent basis, then the rate of increase will be very hefty. Well, as far as the C&E department is concerned, on the fees and charges revision, if you look at the rate of increase is only between 10 and 20%. So when compared to previous occasions, the adjustment is very similar. So from time to time, we'll be monitoring the situation closely to see if there is a need for us to adjust our fees and charges. All right. If there are no further questions, then can I remind members that the administration plans to introduce the fee revision legislation in the first quarter of 2015. So are there any comments on this? If not, then we will give an endorsement, and thank you for coming. Next, legislative proposal to extend profits tax exemption for offshore funds to private equity funds.
Let us invite the officials in. The administration has provided the paper before the meeting, and there will be a PowerPoint presentation.
咁我首先歡迎政府代
May I welcome the government officials for attending the meeting. I think they are familiar to members. I will not introduce them one by one. If you're ready, please start, Ms. Yan. Thank you, Chairman and members. We are here to brief you on our proposal to extend profits tax exemption for offshore funds to private equity funds. At present, fund management business in Hong Kong is doing very well. Using Hong Kong as a base to manage or to sell funds, the combined fund management assets reached 16,000 billion Hong Kong dollars. That was an increase of 27% in comparison to the previous year. In Asia, we are one of the leading asset management hubs in Asia. And we are actively developing Hong Kong as a fund management and asset management center. Together with financial system reforms in the mainland and also accumulation of assets in the region, Hong Kong is well positioned to develop such businesses. We have submitted a paper to the LegCo to brief members on the various measures to develop asset management, and that includes the open fund structure, open public and private fund structure. Now we are here to brief members on the development of private equity industry in Hong Kong, and that is quite a good development in private equity funds management in Hong Kong, and the increase is rather substantial in Asia. As at the end of September, last year we managed $111 billion US, or 21% of Asia's total capital under management in private equity. Our policy objectives are to strengthen Hong Kong's status as a premier international asset management center, to develop Hong Kong into a full-service, all-round asset management hub. You may recall, in 2013-14 budget, the FS proposes to extend the profits exemption for offshore funds to include transactions in private companies in order to attract more private equity to invest in Hong Kong and provide consultant service or advisory service so as to encourage the development of other professional services. In 2006, we introduced a tax exemption for offshore funds. The exemptions cover non-resident entities if they engage in specified transactions, i.e., securities transactions or transactions incidental to the carrying out of specified transactions, and exemptions will be given. These specified transactions will be carried out by specified persons, and these specified persons are in fact corporations and authorized financial institutions licensed or registered under the SFO. Now, this is the present exemption arrangement for offshore funds. Now, concerning the issue in respect of private equity, there is the definition, the problem of definition of securities. Investment is not just limited to securities of listed companies. It can be securities of a private company. Therefore, I think Ms. Yan, there is the division bell. I will have to suspend the meeting for 5 minutes because we have to move to the development panel to cast our votes.